What's up, everybody? Emily Duplessis here from Rental Rookie. First and foremost, I'm going to start by saying Happy Valentine's Day. I hope that you were maybe able to get out and enjoy some time with a spouse or friends or family. Actually, Kirk and I just got back from dinner tonight. My sister came in and watched the girls. We were able to kind of go out and get some time to ourselves, which was nice. So hopefully you were able to do that today. I'm excited to be jumping into our second day of training in our 5-day challenge. So I sent out an email today letting you know that I would be jumping on here at about 8:30 p.m. tonight. I'm super excited to be talking about the content for today. If you didn't get a chance to watch the live video last night or yesterday's topic was all about understanding investing lingo. And so it was really just kind of getting a grip and getting a feel for a lot of the terms and the acronyms that are thrown around whenever you're talking about investing in rental property. And so we talked about things like NOI and GOI, net operating income, gross operating income, ROI, return on investment, cash flow, PITI. There are a bunch of terms that I kind of tried to break down and at least just kind of talk through with you live last night on the training. Hey Stuart, hello. We got some people jumping in. Tony's here, Jerry's here. Say hi. Make sure you know as you're here during this live training, feel free to ask questions throughout the course of the live training. I will try my best to get to them. Kirk is on baby duty right now, so if he gets done and gets Molly situated, then he might be able to jump in here as well to help with the Q&A session. But definitely throw questions in that you have. If I don't get to all of them while I'm on here live, I will get to all of them in response, just in written comment. So definitely throw those in there. We have a lot of things to cover tonight. We've got a couple more people jumping in. That's awesome. I'm excited to be here with all of you. Those of you who are just jumping in, happy Valentine's Day. I'm glad that you chose to spend your Valentine's Day evening with me. That's so sweet. But tonight we're going to be jumping into the numbers that you need to know when it comes to analyzing rental property, because our whole challenge is we're building up each day, getting a little bit harder, a little bit more detailed when it comes to how to actually go through and analyze numbers for a property for cash flow, because that's why most buy and hold investors are getting started. So tonight I'm going to start by kind of talking with you a little bit, and then I'm actually going to flip my screen, and I have some stuff up on the computer here, and I'm going to kind of walk you through some stuff live so that you can see it. So you'll get a little bit of me, and you're going to get a little bit of the computer tonight as well. The video will be up here, of course. If you can't stay the whole time, you'll be able to tune in later if you need to. And of course, as always in the emails, if you didn't get the email yet, go into your email, jump in, and you can pull up the worksheets that I sent you. I sent you 2 different ones. I sent you a checklist and some information. And then I also sent you kind of a little, I guess it's my teaching, English teaching, reading teaching, middle school teaching coming out of me. I also sent you a little activity that you can do if you feel like it, just to help get practice in analyzing and looking at listings, because that's what we're going to be talking a lot about tonight. So I'm going to go ahead and jump right in. I wanted to talk to you guys a little bit as we've got some people in. We got Orlando here, Junior's here, Rich is here. Welcome everybody, Stuart. Glad you're all here with me tonight. I'm going to go ahead and jump in. As people kind of jump in throughout the course of the next 20-ish minutes or so, then I will, I might repeat a couple of things just so people know. So, all right, we are going to jump in, and tonight it's going to be all about listings and the numbers that you need to know in order to run a property analysis, because we can talk about, oh, you need to run the numbers on a property, but if you don't actually know what numbers you need to run an analysis, well, then you don't know what to do and you don't know where to start, right? So there are a number of numbers, for I guess lack of a better phrase, that you need to know and that you need to be able to find in order to run a proper property analysis. So what are some of the things that you need to be looking for on an actual listing, right? Of course, you need to know the sales price. And when you run the property analysis, you're either going to be plugging in that sales price in whatever kind of analyzer that you have. Later this week, actually probably tomorrow, I'm going to be sending you the link to our property analyzer that we use. We have kind of a quick and dirty basic one, and then we have a pretty in-depth detailed one, and we'll be looking at those later in this week. But you need to be plugging in either the sales price or your target acquisition price. So as you get better at kind of starting to know your market and to see what properties are out there and what properties sell for, you might see that a property is listed for $80,000 or $100,000, but maybe maybe that the value of the property is maybe 20 grand less. And so that might be your target acquisition price. So when you're running the numbers, you're going to run it at that target acquisition price, because if you know that you're not going to pay full price for it, well then why run the numbers at full price if you know you're not going to? Kirk and I have this debacle every time we run numbers on a property. He always wants to run them at full price. And I'm like, well, Kirk, we're never going to pay full price for that. So why even waste the time doing it? But we compromise, we do it at full price, and then we do it at target acquisition price. So you definitely need to think about that. Taxes. You need to find out about what the taxes are. Sometimes you can find this on a listing, sometimes you can't. So we're going to take a look tonight at a listing, and I'm going to show you that where you can find it on a listing. Sometimes you won't find it, even on some of the bigger sites like Realtor.com and Zillow and Trulia. Sometimes they don't have updated property information, and if that's the case, then that's when it's time to make a phone call or send an email and try to get updated information about that. Another time that you have to be careful with taxes is whenever there's any kind of reassessment, right? So like with the town that we live in right now, just went through a major tax reassessment last year. Hadn't been reassessed in, I think, since like the 1960s. So like, I know our taxes almost doubled. People got hit majorly around the town because that hadn't happened in so long. So you want to make sure that if there's been any kind of recent reassessments, that you have the most updated tax information. And honestly, guys, I can tell you, even if it says on the listing a tax amount, I would take that info and maybe plug it in for your quick and dirty analysis, but I would by no means put any kind of like truth in that. You need to send an email or make a call. If the numbers kind of work with that number that's listed there, don't trust that that's accurate, because I can tell you probably 8 to 9 times out of 10 that we have seen property taxes on one of those main sites like Realtor or Trulia, Redfin, any of those. When you actually follow up with a realtor, they're not right. So that's kind of my motto for tonight. My mantra is going to be trust but verify. So if you're here and you know Kirk and I, and you've listened to other things that we talk about, that's a big thing that we live by is, all right, take the information, but then you're going to want to verify it. And I'm going to talk about that here in a little bit. Estimated insurance. Insurance is going to be another number that you're going to need to run in an analysis. So whether you have an insurance agent that you can call and get kind of a quick estimate, or maybe if you're buying a property that's already a rental, they might be able to tell you what they're paying currently for insurance, and that gives you at least a ballpark to be able to throw in to run an analysis. Now here, the numbers that I'm telling you right now, the maybe 8 numbers I'm going to tell you, these are kind of for that quick and dirty, like, all right, we're just going to throw in some of these basic numbers and see if it meets that ROI guideline. Yesterday, I talked about kind of how ROI is kind of like a line in the sand, kind of like your baseline. It's a property's either going to pass that or they're going to fail it, right? And if they pass your goal, your mark, your ROI mark, you're going to move forward. If they don't pass it with the quick and dirty numbers, well, then it's not worth your time. So whenever you're talking about insurance, definitely something that you're going to want to be, getting an estimate for, or at least finding out from the person who owns it right now. Richard, you mentioned that you check the county assessor site. That's a great idea. If you're able to kind of research that, Google it, and find out what your county assessor, what your county assessment or your whatever site that your county uses, that's a great place to look, is to be able to find it. Because like I mentioned, sometimes some of those sites are not updated. Like I know Realtor.com right now for our town, there's no tax information in there. And I assume it's because we just went through the reassessment, and so there isn't really a lot of tax history. And the tax history that is there is going to be so far from what it is now. So thanks, Richard. That's a great point for other people who are tuning in. All right, vacancy rate. I'm going to talk a little bit more about that in the detailed analysis. Expenses. So if you are buying a rental property that's currently a rental property, or if you are buying a property that you're planning to pay the utilities for, then you're going to want to throw in your analysis a number that you're expecting to pay for expenses. So this is going to be things like heat and water and sewage and I'm trying to think, electric, right? Oil, depending on what your heat is. So that's definitely something to think about if you are going to be a landlord that is hands-off when it comes to utilities. And if it's a single family, especially, I know all of our single family units, we don't pay any of the utilities unless it's included in a condo fee for some of our condos. Now, some of our duplexes were older homes that were turned into a duplex, so they share a lot of the utilities. So then we're stuck paying for them, which, the numbers work, and we bought them with the numbers working, so it isn't a big deal, but it would be much nicer if we were able to just kind of be hands-off with it. So definitely something that you're going to want to consider when you're running that quick and dirty analysis. You're still going to want to include those expenses because they're going to be there every single month, and you're going to want to account for those. An average interest rate is another thing that you're going to want to include, especially if you're using, obviously, financing from an institution. You're going to want to find out kind of what the going average interest rate is for the type of loan product that you're going after based off of your credit score, and so that you'll be able, again, to get the most accurate analysis that you can. When we're talking about those quick and dirty numbers, you still want them to be fairly accurate. You don't want it to be like you're just throwing in these guesstimate numbers in that analysis. You still want it to be fairly accurate. So the better the quote that you can get for some of these things that maybe you don't have readily available in terms of the information, just the more accurate your analysis is going to be. So I definitely recommend that. Whatever your down payment amount is going to be, that's going to be included in your analysis as well. So if you're planning to house hack, then you might be going in and only paying 3.5%, 5%, 10%, depending on what loan product you're using. If you're going straight conventional financing, then you're probably looking at 20% if it's your first property, right? Maybe more if it's a multi-unit, depending on what route you take. So your down payment amount, that percentage, is going to be calculated into that quick and dirty analysis as well. If you are buying any kind of association property, so a condo, a townhouse, your HOA, your monthly HOA or monthly condo fee is another fee that's going to be included in that quick and dirty analysis. So that's typically listed on a listing, depending on where you get it from. But I would still, again, trust but verify. You can follow up with a realtor to get that accurate number, because that's going to be time and time again, month and month again, you're going to have to pay that fee. And then that kind of are the basic numbers. Now this is, when Kirk and I run our quick and dirty analysis, those are pretty much the basic numbers that we're throwing in there. We're not getting into depreciation or vacancy rates or maintenance, a certain amount that we put away for maintenance or deferred maintenance or any of that stuff. We're not really getting to that. It's just with these quick numbers that we have, does it meet our ROI standard or not? If it does, then we'll start to make contact. We'll start to go look at it. We'll start to get more accurate numbers. If it doesn't, well, then we don't waste our time and we don't move on. Because if it didn't work with the quick and dirty numbers that we just went over, then it's probably not going to work when you start throwing in CapEx, capital expenditures, deferred maintenance, depreciation, taxes, all of those sorts of things. Then it's probably really not going to work. So if it works with the quick and dirty, then we'll move forward. If not, then we'll start jumping into more of those analysis. And I'm going to jump into kind of that detailed analysis now. JJ, you mentioned to make sure to check for pending special condo assessments. Absolutely. The scary thing about condos and HOAs, and we have a couple of condos and HOAs, and to be honest, they're great properties. They've been awesome. We haven't gone to most of them in years, and they make us a ton of money. And so they're great. But the reality is when you get into an HOA or condo, you got to be careful, because those fees, those association fees that you're paying, they can go up every year, and that eats into your profit margin. So definitely something to think about if you're going to go that route. You want to watch your spread when it comes to, the numbers, and making sure that you have enough spread there, because it could go up. Right? I just saw Kirk has joined in from the other room. He must be on. He's going to also be jumping in and answering questions. So for those of you who have jumped in, we've had quite a few people jump in since I got started. If you have questions, please throw them out there. If you are understanding things and it makes sense, just give me a thumbs up. That helps so that I know that you're understanding what I'm talking about. Feel free to answer questions. So either I will get to them here on live, or Kirk will get to them in the chat. JJ, you said run. Absolutely. Yeah, I think you kind of hit or miss with those properties, right? It's either we've had a lot of success with them, but I think it's because we've had enough spread. We've made sure that those properties make us a ton of money, so that if those assessments start to go up, those monthly assessments start to go up, it doesn't kill us, right? It doesn't eat into our profit margin too much. So that's the quick and dirty. Now let's jump into some of the numbers that you're going to be including in a more detailed analysis. So of course, when you're going to run a more detailed analysis, all of the numbers that I've already mentioned are going to be included. So the purchase, target acquisition price, taxes, insurance, all of that, interest rates, down payments, all of those things are going to be included. But now we're going to take it one step further, and this is where you're going to really get that kind of accurate, what is my real return on investment, when you're taking a bunch of other things into consideration. So this is where you might start including things like vacancy rate. So I talked about this in yesterday's training. Typically there's kind of an average for your town or your area. What is that vacancy rate? Is it 5%, 10%? You might just include kind of like a 1 month's total expenses. That's kind of what Kirk and I do. If our total expenses are $600, we might assume that our property won't be rented for 1 month throughout the course of the year. So we'll kind of include that in an analysis. Your capital expenditures, right? So those are those big ticket items. I talked about this yesterday, that could totally break the bank if they go bad or they break, right? So things like electrical or plumbing or roof. The HVAC system was the example that I used yesterday. So you want to be saving a little bit of money each month that you're putting away to be able to pay for those things when they go bad. Because what you don't want to do is have, a property for 6-8 months, maybe 3-4 years, and all of a sudden one of these big ticket items go and you haven't been saving any of the money and you don't have anything in savings or anything liquid that you can get your hands on. And now you're, having to charge to be able to get these things fixed because you have a tenant in there. And so you have to get these things fixed in a timely manner. So those capital expenditures you're going to want to be including in that more detailed analysis. Your effective tax rate, right? So depending on where you are on the hierarchy of taxes, if you really want a detailed what's really going to be my return on investment after everything, right? Expenses and loan pay down, even taxes, that's something that you're going to want to include in that more detailed analysis. Any kind of advertising that you're planning on doing with your properties in terms of management, if you're going to self-manage these specifically, then if you're going to do any kind of paid advertising, then that's going to be something that you're going to want to include in your analysis. So if you're sending things to, a newspaper and you have to pay for that, there's a ton of free sites. We typically use Craigslist and Trulia and a lot of those. But there are now, in the world of Facebook and Facebook ads, it's a great way to get your properties out in front of people who are local, who are looking for properties. And I'm going to have a whole lot more to come on that in a little bit, not in this 5-day challenge, but coming down the road about Facebook ads and rental properties, because that's a huge area where there's a lot to learn. And so there'll be more to come on that. But any kind of advertising that's going to be going on, you're going to want to include that. Any kind of upfront renovation costs. So if you're buying a property that is, disheveled, that you're going to have to go in and fix up before a tenant moves in, you're going to want to throw in that estimate of your renovation costs. If you've got to throw $3, $4, $5,000, maybe more into a property, think about it. That's money that you're putting into the property before you ever make any money out of that property. And so that is going to be included in that kind of initial property analysis, because that's going to be all in cash, right? Because when you run your ROI, you're going to be taking that operating net, that income, your income that you're making less all of the expenses, and you're going to be dividing that by that total cash investment. So if you had to put money into it to get it livable or to get it to the standard that you want, that's total cash invested, and that should really be included when you run your analysis. Closing costs is another thing. That's another upfront cost that you're going to want to be including. Again, before you even get a tenant in there, that's money that you're shelling out of your pocket to be able to put into the total rate, I'm losing my train of thought, the total cash that you're putting into the property. Now, here's a little side tip. If you're out there and you're listening to this, there are things like seller assist. So if you are buying a property and maybe you're trying to keep as much cash in your pocket as you can, well, then you might be able to ask for some closing costs to be paid for by the seller. And so, that's a strategy that Kirk and I use. I'm not going to get too much into it right now because it's totally a sidebar from our focus, but definitely something to consider is having, if you're trying to keep as much cash as you can, maybe throwing into your offer this idea of having the seller pay for some of the closing costs, and that just helps you and not having to put so much money up front. So those are some of the major numbers that you're going to be including whenever you run your detailed analysis. Now, like I said, I'm kind of telling you what these numbers are now. In your email, I have an entire checklist of this for you. So if you go to your email, you can go ahead and get the checklist and print it. You can look at it. You can pull it up right now while you're listening to me. And also there is another worksheet that I'm going to get to and talk about soon. I'm actually going to get a drink of water because my throat is starting to get a little hoarse. Throw in any questions. I see I have a couple of questions here, so I'm going to get to those before we move on to kind of the next section. Now, I know sometimes it's hard because I'm just like listing out numbers that you need to have for your analysis. Tomorrow and Thursday and Friday, we're going to actually be looking at our property analyzer, which really does all the calculations for you, right? So you're probably sitting there like, okay, great, Emily, like, I get it. There's all these numbers that I have to have. You gave me a checklist. Awesome. So I can go and I can look at a listing and I can find all that information. But then what the heck am I supposed to do with that information, right? Yeah, I see it all on there, but how do I do this? How do I calculate it? That's going to be coming on tomorrow and Thursday in our training, is we're going to actually show you how to plug those numbers in. We're going to give you our analyzer so that you're able to, run these analyses so that it's quick and that it's easy. You should be able, if you find a property, to be able to run an analysis in just a couple of minutes and be able to see if it meets that ROI standard. So that is going to be coming in the next couple of days. Today is really all about just kind of letting you know what numbers you need to be looking for, and then we're going to actually now take a look at some listings and talk a little bit about where to find that information. So Stuart, you asked about talking a little bit more in detail about home warranties, and I talked a little bit about this yesterday on the first day of live training. We have found our home warranties to be really effective for us. You asked if they're worth it, and I'd have to say in our case they have been worth it. Now, they are, they're a lump sum of money. If it's a single family property, then it might be 400, 500. Some of our duplexes run us between, 600 and 700. And so it's definitely some money that we're putting out of pocket. But, I mentioned yesterday on the training, for those of you, if you haven't had a chance to listen to it yet, one of our properties, our HVAC system went. And so we had to get an entire HVAC system replaced. We had a home warranty. We made the call. We paid the $75, $80 trade fee call that we have to pay. I think we had to pay like another $80 for like some cement slab to be put down for the HVAC system to sit on. So I think we paid like maybe $150 out of pocket, and it was a $6,500 HVAC system. So, you take that $150, you add that to maybe the $400 and some that the home warranty was for that year, and we're still, we still made out way better having that home warranty. And I can tell you, in another one of our properties where we let our home warranty expire, the HVAC system went this year, and it cost us, $6,000 and some that we then had to pay out of pocket. And so luckily, we had the CapEx that we had saved. That property's made us a ton of money over the last 4 or 5 years, but it still hurts. It was like, a dagger to have to pay for that when we knew we should have re-upped that home warranty. So, Stuart, we have found them to be really worth it. I wouldn't say that they're cheap, and I wouldn't say that they're expensive. I think it depends on what type of property and what that property is yielding you in return. And that might be even, on talking about numbers to include in an analysis, that might even be another number that you include. Maybe you throw in, when you're running an analysis, maybe you throw in kind of an estimate of what that home warranty is going to be. So if it's a duplex, you might want to throw in like in that upfront cost, just to kind of give you maybe even more of an accurate ROI. I'm going to throw in there that we're going to be, paying $600 for a home warranty this year. And I'm going to just throw that into kind of that upfront cost or a maintenance fee or whatever, however you want to calculate it or however you want to input it on a spreadsheet. You could do that. And actually, we don't do that. And just talking with you guys, that made me think that we should do that, because we do that every year. So hopefully, Stuart, that was helpful. All right, I want to go ahead and jump into the next one. Again, if you guys have questions, I know Richard drew through one up here, and we'll get to that here in a little bit. Definitely keep those questions coming. Like I said, if I don't get to them live here, I will definitely respond to them in writing after this. All right, so we are going to jump into talking about, and I'm just pulling it up on my computer because I'm actually going to flip my phone and flip the screen, and I'm going to talk to you a little bit about listings and how to look at listings. So I'm sure a lot of us out there, if you're interested in a rental property, you definitely have probably spent time perusing online, like Realtor.com and Trillia and all those sites that are out there. And so I thought what it would be beneficial for you guys to actually see me pull up a listing and kind of show you where to find this information. And then I'm also going to give you some tips on some things that you can learn about in a listing. So I'm going to go ahead and I'm going to take my phone and I'm going to switch this, and we're going to go ahead and get started here. Okay, so unfortunately, Facebook is not able to screen share yet whenever you're live. So I'm going to kind of hold my phone. We'll see how this goes. Hold my phone and kind of show you what I'm looking at here. So I'm showing you a property right now, and I'm actually showing you a property Kirk and I just went and looked at, and we are actually in the process of potentially maybe making an offer on it. So I thought, oh, what the heck, I'll show you guys this one. So this is a 3-unit that we went and we looked at, and this is the listing on realtor.com, right? So you put in your city and you search and what comes up. And so here you can see there's a ton of pictures. Whenever you're looking at a listing, looking at the pictures is crucial, right? So if you pull up photos, then you're able to, you know, kind of scroll through. You guys can see that this property is fairly new and updated. You know, so when I'm looking, and I'm just going to kind of tell you what kind of my thought process is when I look at a listing, because I think that might be helpful for you to just kind of hear what I think about when I see a listing. So, right, like as I'm looking at this, when we first saw it, we were really excited about how new and how updated and how clean it was, because that's really important for Kirk and I. We have found that good properties with good tenant screening yield good tenants. And so, you know, when you see properties like this, sometimes it's worth paying just a little bit more to have a property that, you know, is in this condition. Or if you don't mind putting in some of the work, then it might be okay for you to be able to get something that maybe isn't in as great of shape. But when you scroll through, right, there's always some information. So you can see here that there's a nice description, and it talks about how it's an investment property. It goes into detail about some of the different perks of the property. Now it does mention, because this is a triplex, that all utilities are separate. So I'm going to go ahead, I'm going to pull up kind of my thing here so that I can circle it for you. But it says all utilities are separate. That's a huge, important piece of information for a potential investor, right? That's important, because I'm saying when I'm looking at a triplex, especially with our history with our duplexes, when we have to pay the utilities, if all the utilities are separate, then we don't have to have that as a cost on our end. So that's awesome. So that when you're reading a listing, if you're looking at any kind of multi-unit, then that's definitely something you want to look for on the listing. And if it's not listed on the listing, then you want to make sure that you ask that, whether you ask your agent or you make contact with the listing agent. That's a question that you're going to want to ask. You can see here there's also information about another property that this investor is selling. So here it's saying that there's an additional 2 units, and so you could potentially get 5 units. So when I read that, right, and again, I'm just kind of walking you through stream of consciousness, I'm going, all right, so we have an investor who has multiple properties. He's getting rid of these 5. Hey, he might have more properties that he's worth getting, you know, that he wants to get rid of. Maybe he's retiring, moving out of the area, whatever it is. So I jot that down as a question to ask. Yes, they're obviously selling these 5 properties, but are there more? And if there are more, is there, you know, can we set up a day where we can maybe just go see a bunch of the properties? Because that might be a lead into other properties that might be possible for us to purchase. So you definitely want to look over those descriptions and see what's out there in terms of, you know, those short little descriptions can give you a lot of information. As I'm going here, throw questions in. We've had a couple people in and out as I keep moving, and go ahead and throw your questions in. Either I will get to them or Kirk is in here on the chat. And so if I don't get to them, he will hopefully answer those questions as well as I'm going. So as you go on here, another point that I want to show you that I always look at when I'm looking at listings is how many days it has been on realtor.com. So like here, right, this was listed 22 days ago on realtor.com. And that's really important information, because, you know, there's another property, and you'll see the property that I sent to you in your email. I sent you guys another listing for you to be able to kind of practice looking for information. And you'll see that listing in your email, I think, has been on for like over 300 days. So that's another big piece of information for us. When we see that, we say, okay, well, it's only been on the market for 22 days or 5 days, or hey, it might be the first day on the market. And you know what? I can't go in there most likely too aggressive, because if I go in there like aggressively giving an offer that's way below asking price on the first day, most likely they're probably not going to take it unless they're super motivated as a seller. But if I see that a property has been listed for 30, 60, 90, 300 days, then you've got to tell me that 2 things are happening. 1, the seller is getting desperate and really needs to unload it, which means I could get it like way below list price. Or the seller is really, really stubborn, and we might not ever be able to make a deal because they're just too stubborn and think that their property is worth way more than it is. And Kirk and I are actually going through that right now with another property that we're looking at. So, you know, 2 things can happen, but I always look at how many days the property has been listed. All right, another drink. I'll move closer here so that you can see that. Of course, it gives you all sorts of information about interior features, so it gives you information about flooring and ceilings, gives you some information about exterior features, what type of heat system there is, roofing, and then it will break down into room description. So this is another important piece that I'm always looking at, because I want to know how many bedrooms and how many bathrooms, how many units, all of that information. I want to know that, right? Because that's really important information in terms of knowing, because typically the more bedrooms that you have, the more money that you can get for rent, right? And so I want to know if it's got 2-3 bedrooms, and that's going to impact most likely what I can get for rent. So another thing that I'm always looking for whenever I'm looking at a listing. And then it breaks down into more information about where it is, location, parking, school district, which, school district, depending on where and your goals, if you're looking to invest and rent to families, then school district might be kind of important. You might want to pay attention to that and pay attention to which schools in your area are good schools versus maybe not so great schools. Where do people want to go? Is it close? Is it convenient to schools? If you're looking to get tenants that are families, that's something that you're going to want to pay attention to. All right, and then this is the kicker. This is the important part. What is the property renting for, right? So if you're looking at a multi-unit, a duplex, a triplex, hopefully listed on the listing, you will find what it's currently renting for. So you can see here, these 3 units, they're each renting for $1,200. So gross income that this property is bringing in every month is $3,600. So that's huge. That's important information. But I'm not going to lie to you guys. A lot of times you will not find this on listings. And so you're going to have to do a little bit of legwork. You're going to have to send an email. You're going to have to make a phone call to be able to find out that information, because that's crucial. You can't run a property analysis unless you know what a property is renting for. And sometimes on listings, it might say 2 are rented and 1 is vacant, right? Or it might not just say anything. But if you're interested in the property, you've got to make the phone call or you've got to send the email so that you can be able to actually run that property analysis. Because if you don't know what it's renting for, then you're not going to be able to do anything about it. Now, on the flip side, those of you out there who are looking to go the single family route, right? And to be able to, you might be buying a, rancher or, another single family unit that isn't a rental right now, but you're planning to turn into a rental. So it's not going to have some of this rental information on the listing. Well, then you're going to have to do a little bit of homework. And you can go about it 2 ways. You can call and I'll kind of flip this over. You can call your realtor and you can ask them some of these questions and get some of that information, or you can just take a little bit of time and do a little bit of research online. It's super easy to jump on some of these sites like Realtor.com, Craigslist even, Trulia, and to be able to, instead of searching for properties that are for sale, searching for properties that are for rent. And so I do this occasionally, especially if we're looking in a new market, a new area that we don't really know a lot about. I'll jump on and I'll just kind of quickly do a search and see what properties are renting for in terms of listing. So what they're listed to rent for. And so sometimes, we have made phone calls where we've seen signs up in the yards for properties just to kind of see what they're renting for. And even sometimes in the areas where we have properties, we've had properties in some areas for 4 or 5 years now. So I'll jump on every once in a while and just kind of see, all right, has the market gone up? Have rents gone up? Are we going to be able to, if a tenant leaves, up the price at all? Somebody mentioned, I saw earlier in a comment, I don't remember who it was, Richard, I've also found the rents listed wrong. Absolutely. I have found so many wrong things on listings. So I'm going to go back to what I mentioned earlier. Kirk and I live by trust, but verify. So you can run all of the numbers, like I mentioned earlier, that you can find on a listing. You can run those. And if it meets that ROI standard, then you want to go and you want to verify it. Never, ever, ever trust the information that you get on a listing, because most likely, I would say 8 times out of 10, some of the information is wrong. So definitely something that you're going to want to think about and pay attention to. The other thing that you can find on a listing, this back around, is the property tax information. So you can see here, I'll go ahead and pull this up. Here it goes ahead and it tells you what the taxes are for the last year. So like here in 2016, it's saying that the taxes for this property were $6,748, right? And so again, I'm going to warn you, I wouldn't always trust them. I might throw them into, the analysis just so I have a basis, because most likely it's probably around there. But as I'm moving forward with the property, I want accurate numbers. And so, Kirk and I have gone as far as asking them to send us documents that prove what the taxes are. And you can do that. And that's kind of where I'm going to go next here in a minute, is you're allowed to ask for proof. You are allowed to get things verified. And so, these are some of the major things whenever I'm scrolling through a listing that I'm looking for. Those are some of the main things. And then you can scroll down and you can see that there's a lot of other information. I want to just go ahead and quickly show you your worksheets for today, right? So here, when you get into your email, I sent all of these to you, you'll see that there's a checklist that goes over all of the numbers that I talked about tonight that you need to be including, both in a quick and a detailed analysis. I have an activity for you to do, and this gives you directions for that. I'm actually sending you some screenshots of a listing. And I'm asking you to kind of practice. So you can see here that this is a sample listing. I took information from realtor.com. And I basically, in the directions for the action steps, I'm asking you to go through and to find as much of the information that I kind of talked about today on this training as you can on the listing, right? And circle it, highlight it, whatever you want to do, and then compare it to that checklist. So what sorts of things were you able to find on the listing? What sorts of things were you not able to find on the listing, right? And then you would know what sort of information you would have to then go verify and find out, or make a phone call or send an email. So that's another thing that's in your email. Head on over there. I also have a little answer key where I have things highlighted and arrows to it so that you're able to see that. And so definitely something that you're going to want to check out. The last thing that I want to talk about kind of before I wrap up today is this whole idea of trusting but verifying. It's super, super important. And you can see at the bottom of the worksheet that I sent you, I have on there, keep in mind to trust but verify. But it's super, super important because, like I mentioned a couple times, and a couple people have mentioned in the comment section, we constantly are finding information wrong. And it's really frustrating as an investor. But it goes to show that you just have to do a little bit more work, and you have to ask for verification, and it is okay. I guess that's the biggest thing, is that it's okay to ask for verification. My sister and brother-in-law actually partnered up with us on a property that we own, and I can remember when they first, were starting to get involved with us, they wanted to do a lot of it. They wanted to, not necessarily rely on Kirk and I to do everything. They wanted to, make phone calls and things like that. And so, she called me and she was like, Emily, like, I found this information, but I want to find out this and that, and I don't know about expenses and utilities and all that. And I said, Annie, I was like, you just ask them to see leases. Ask them to see, a profit and loss or an expense spreadsheet. Ask them to see tax statements, right? You're allowed to do that. They can always say no, right? But you're allowed to ask for that. And honestly, most times Kirk and I have asked, we've been given information. We have even gone as far as getting copies of bills sent to us because we wanted to verify, because we saw that there were, there was like thousands of dollars discrepancy between utility bills that was listed on realtor.com or one of those sites and what actually the bills proved to us whenever they were sent to us. So it is okay. I think that the big thing I want to get across to you right now is that it is okay to ask for those sorts of things. They may say no, and it is what it is, but ask, because the worst they can do is say no. So ask to see a current copy of the leases. Ask to see utility bills. Ask to see an expense spreadsheet. Ask to see, a tax statement, so that you can verify everything that they're saying, that the listing agent is saying, or that is listed on these sites, because that's super, super, super important. So I really hope that some of this stuff was helpful. I really wanted to break down tonight what numbers, kind of two things, what numbers that you need whenever you're looking at a listing, and then kind of just like the thought process of what we think about whenever we're looking at a listing. So I hope that was helpful. I know that there's been some questions on here. I know Kirk is in on the chat. I think he's been answering those. I'll definitely take a look at those afterward. Excuse me. And I'll get back to anybody who we weren't able to get to tonight. If I know, so I saw someone there mention that you're not getting the emails, then you may have found your way into the group a different way. You can either just shoot me a message, private message me your email, and I can add you to it. Or you can head on over to rentalrookie.com/challenge, and when you sign up there, then your email gets automatically added to my list, because I'm sending out daily emails with worksheets, and you'll also get a link to the library page where we'll have kind of all the videos and worksheets and everything there. So thanks for tuning in. I hope that day 2 was helpful. Tomorrow, day 3 is going to be all about focusing on return on investment, which is super, super critical that you understand how that calculation works and why it's so important to investing in rental property. So we're going to be talking about that tomorrow. Later on, as we continue through the week, we're going to be jumping into actually analyzing a property and pulling numbers from listings, and I'll be shooting you guys the links to our analyzer so that you'll be able to use that as well. So thanks for tuning in with me tonight. Happy Valentine's Day. Keep working hard. We're 2 days into this challenge. Again, if you have questions, throw them here. If you're watching this not in real time, keep asking questions. I am in here, I'm monitoring the Facebook group all day, all week. So throw those questions in, and either Kirk or I will get back to you and get those things answered. So thanks for tuning in. And until tomorrow, happy investing.